Hello Dairy Today viewers. On behalf of the Market 360 advisory team here at Stewart Peterson, I'm Tom Mongovan, and this is your week in review for the week of December 7th, 2012. Taking a look at our CME dairy components, relatively quiet week for the cash cheese trade, block settling unchanged on the week at 176, barrels down about a nickel. Butter was down slightly to close at 159 at the conclusion of Friday's trade. Whey was up slightly and non-fat dry milk unchanged. Milk prices dropped this week and are currently at oversold levels. December has rolled into the front month slot and was down 23 cents. January and February both ended up closing out the week at 18.07, down around 70 cents each. The 2013 average also took a hit this week as the focus will turn to the first quarter months, and that average closed at 18.31 at the end of the week. As we mentioned, it was a relatively quiet week for the cash cheese trade. The block barrel average dripped lower on light volume this week and ended up settling at 171 at the conclusion of Friday's trade. That's down about 3 cents on the week. We do expect cheese to form a base around these levels for a couple of reasons. Cheese inventory levels are still very low. The holiday season is upon us, which is typically a very strong demand time of the year. And the CME price is now below Oceania's price, which makes us more competitive internationally. More on the Oceania issue in a later slide. Taking a look at the January milk contract on a weekly chart, you can see the sharp sell-off we have seen over the past couple of weeks. Whenever prices sell off sharply in a short amount of time, that's when we start talking about oversold conditions. This, combined with where cheese prices are at, could lead to a price rebound next week. Cheese stocks in select cold storage facilities increased for the second consecutive week, as we saw in this week's data. Inventory increased from about 113 million pounds to 114.3 million pounds, an increase of about 1.4 million pounds. This week last year, inventory was over 130 million pounds, an increase of 12.2% over where we are right now. Over the past 20 weeks, the weekly cheese inventory level has increased only 5 times. Due to the Thanksgiving holiday, dairy cow slaughter slipped to 49,800 head for the week ended November 24th. As you can see from the chart, again, thanks to the Thanksgiving week holiday, we had a sharp decline from last week at 65,000 all the way down to 49,000 this week. But taking a look at the previous 2 years, you can see a sharp decline is typical for that week in the year. The same week last year, slaughter was 47,100. Year-to-date slaughter is still up 6.2%, which is a difference of about 161,000 head. This week, we saw updated data with respect to the Oceania cheese price. Oceania was up about 2 cents to 181 in the latest report. With the CME price closing at 171 today, we are now at a discount of 10 cents to Oceania's price. Only a matter of weeks ago, the CME price was at a 30 cents premium when CME was at 208 and Oceania was at 178. This certainly makes our cheese more competitive with respect to international prices. Taking a look at the week ahead, Tuesday will be a big day as we have a dairy export report coming out. We also have a USDA crop production report that will probably affect the feed market. That will do it for us this week. On behalf of the Market 360 advisory team here at Stewart Peterson, thanks for watching and have a great weekend.